So really the biggest shift for investors, especially new investors, is moving from kind of the snapshot view, I like to call it, of when you look at a single family house. You're kind of looking at a snapshot in time. You say, okay, I'm going to pay. Actually, let me share something here real quick. I think that'll. I think you guys can see this screen, right? A lot of people just do for a single family home, they look at some kind of investment tool like this. And this, maybe you guys use something different, but I'm going to pay this price. I'm going to put X amount of money down for this interest rate, this number of years. I'm going to get, rent, and then you plug in your property tax and everything else. And I'm going to make $100 a month. People say, okay, that looks good. There's other things on the advanced about maintenance and vacancy rate, management fees. But a lot of people just look at a single family house as a snapshot in time. I'm going to have this expenses, I'm going to have this much income, and this is what I'm going to make. Okay. When you look at, I'm going to quit sharing here. When you look at rental property for commercial, you're looking at a long-term game. And that's like the biggest mental shift you have to overcome is you're now not looking at a snapshot in time, you're looking at a 5-year projection, or you're looking at a 10-year projection, wherever you think your exit is going to be. So you start looking at things like internal rate of returns, you start looking at long-term cap rates and those other levers. And that's one of the biggest things that you think about differently when you look at commercial. You start talking, how do I reposition an asset to improve NOI? Do I have any upside in rents? Can I add, a gazebo out back and people will like it? Can I add a pickleball court? I mean, there's all kinds of things you can do to up the value for your tenants. You can also look at, on a larger scale apartment, how can I reduce inefficiencies? You can't do that in the single family realm. So a big one for a lot of apartment buildings is, how do I, if I'm paying water utilities and I'm paying trash, how do I get the tenants to pay that? We do that through a mechanism called RUBS, ratio-based utility bill-back system. So if we know we're spending X amount of dollars on water and trash, we have 20 units, then everybody's going to pay $35, and that covers that expense. That also raises the value of the property at the same time. So reducing inefficiencies and repositioning your rents is a huge impact on the actual value to a multifamily or a commercial property that you cannot get inside of a single family house. And then you also start looking at, what's my long-term exit plan? Am I going to refinance? Do I sell it? Do I just ride the note out and hold it long-term? Those are all things you think about when you go into a commercial property that you more than likely aren't thinking about on the long-term hold for a 1 to 4 unit property. So that's just a different shift in the mindset and how you think about properties.
You're talking more of like a single unit, not something like Huntley or Normandy or something like one of these bigger strip malls or anything. You're talking more of an individual.
Could be. It could be a strip mall. It could be a 40-unit apartment building. It could be a 10-unit apartment building. All those different commercial assets, the commercial class of assets is a long-term strategic plan. And you got to think about it as a long-term strategic plan and really shift your mindset from, hey, I'm just building a rental portfolio, to I'm running a real estate investment business. Does that make sense?